Good morning or good afternoon. My name is Dan Clifford and I'm the Managing Director of Aurelia Metals. We're a small cap Australian mining company focused on gold and base metal production, headquartered in Brisbane, Australia, and forecast to produce between 100 and 113,000 ounces of gold and approximately 50,000 tonnes of base metals across copper, lead and zinc. We have a high quality register comprised primarily of Australian institutions and retail investors. Our operating portfolio consists of 3 established operations centred in Western and Southern New South Wales. Hera was commissioned in 2014, producing gold doré and a lead zinc bulk concentrate. Peak was acquired in 2018 and produces gold doré and separate copper, lead and zinc concentrates. And Dargues finally was acquired in 2020 and produces a gold concentrate as opposed to a gold doré. In combination with these operating assets, Aurelia controls significant and highly prospective exploration licenses in the vicinity of our operating assets. And this comment is supported by our most recent discovery called Federation, only 10 kilometres from our existing Hera operation. Underpinning this asset base is our strategy. It's clear and it's simple, and it's aimed at returns growth. The base of this strategy is our current asset base and driving utilisation, margin, and life extensions to these existing assets, or as I like to put it, sweating our infrastructure and assets. The next and current step to growth is our disciplined investment into exploration and M&A to set the tension for the dollar deployed, and that's simply directing our dollars to the highest return. This will create long-term value and growth in returns with the additions of assets that constantly improve our group costs and our resources and reserves. Fundamental to our long-term performance is our equivalent growth and excellence in sustainability. The well-being of our people, environment, communities, and due regard to the non-financial performance areas encompassed in our AISC responsibilities are essential. The performance to the 6 months to December 20 has been outstanding across operations, financial and health and safety. There has been a results improvement at every level, a 26% reduction in our recordable injury frequency rate, 46,000 ounces produced at an all-in sustaining cost of just over $1,000, putting our costs in the lowest quartile in the sector. We're closing in on the high-grade Kairos ore body at Peak, and we recorded a record interim net profit on an underlying basis of 41 million Australian. From a growth perspective, it has been a game-changing half, with the stunning results continuing to flow from the Federation deposit and the recent acquisition of the Dargues Mine, demonstrating the execution of our strategy in a relatively short period of time. This is resulting in a strong balance sheet, including a dividend being paid in the period. The company's financial results are strong. In conjunction with the record interim net profit after tax, a 44% improvement in EBITDA and a 13% improvement in our EBITDA margin to 35%, or actually 44% on an underlying basis, shows the strength in the earning capacity of our assets. These resultant cash flows have improved remarkably, and cash flow increased by 165% even after continued growth and exploration investment and returns to shareholders in the same period. The outlook for the financial year has been improved in both production to 100 to 113,000 ounces from original guidance at the beginning of the year of 80 to 90,000 ounces. And our all-in sustaining cost has reduced from $1,500 to $1,750 an ounce to $1,425 to $1,575 an ounce. Base metals remain unchanged and at a combined approximate 50,000 tonnes of lead, zinc and copper. A key catalyst in short-term value is the commencement of the Kairos lode at Peak. It consists of plus 1 million tonnes at approximately 8 grams a tonne and will commence production early in the June quarter of this year. The Federation project. This find has eclipsed any other ore body in our group at the moment. The updated MRE of 3.5 million tonnes boasts a staggering average grade of 19.6% on a zinc equivalent basis, or on a comparable basis, calculated the same way, approximately 9 grams a tonne gold. It is one of the greatest discoveries in the Cobar region in recent years, and I'd actually go as far as to saying that it's one of the highest grade deposits in the country, second only potentially to Fosterville in Victoria. It contains approximately 158,000 ounces of gold and significant quantities of base metals already, and has a significant proportion of the MRE being in indicated status. The deposit's only 10 kilometres south of our existing Hera operation, representing a capital efficient development based on the use of existing infrastructure in place. Our Dargues acquisition the Dargues operation, I should say, was acquired in late calendar year 2020 and is going through transition and ramp up over this half. It is an on-strategy acquisition and is expected to produce circa 45,000 to 55,000 ounces of gold per annum at an all-in sustaining cost of approximately $1,250 an ounce. This is over the next 5 years. The asset is fully capitalised and nearing or at nameplate capacity of 30,000 tonnes a month mill feed, with grade set to increase to the LOM ranges between 4.9 and 5.5 grams a tonne with depth. One of the key attributes of this investment is that it was completely under-drilled by its prior owners. We believe there's a strong likelihood of mine life extensions, and thus an extensive surface and underground drilling program has commenced to test at depth and along strike. So in wrap up for Aurelia, we are really well positioned and well on the way with our strategy execution. We have 3 operating assets being run hard and efficiently. We're centred in an incredibly prospective region, and we're well positioned for growth, both organically via exploration or inorganically via M&A. The balance sheet is strong, and we have paid an annual dividend over the last 2 years and have a clear and simple strategy that will continue the drive towards growth in our returns. Thank you for your time.